Good day. Wherever you are around the world, I welcome you to another section of A.E Accounting tutorials. We are continuing our series on depreciation of tangible non-current assets. But this time, we are going to take another practice question where you will be required to calculate depreciation using the reducing balance method with each month's depreciation policy. Is that okay? Remind you, in our previous video, we took a question that actually required us to calculate depreciation on a straight line method with full year depreciation policy. Before we proceed, I will actually entreat you to subscribe to this channel, turn on the notification bell so that anytime I upload any new video, you will actually get notified. And also like, comment and share this video for the benefit of others. And let's actually try to take the question together and try to see how we can solve it. Is that okay? That is, the question is on the reducing balance method with 1 month ownership basis. Is that okay? So we have to take it together, go through the question together and try to solve it out. Is that okay? So the question is, the following information relate to the fleet of vehicle of Nimakwa Limited. And we have vehicle registration number, date of acquisition and disposal, cost, and we have sales proceed. With the vehicle registration number, we have GT 400, date of acquisition 1st January 2020 at a cost of $50,000. And we have JR 429, and the date of acquisition is 1st July 2021. And the cost is $80,000. And we have TR 140, date of acquisition is 1st January 2022 at a cost of $72,000. And we have the same GT 400 and date, by this time, date of disposal 30th June 2022, and the sales proceed on disposal is $31,000. The company depreciates the vehicle at a rate of 20% per annum using the reducing balance method on a 1 month ownership basis. Nimakwa Limited prepare accounts to 31st December each year. You are required to prepare A. Motor vehicle account, B. Provision for depreciation account, and C. Motor vehicle disposal account for GT 400. Is that okay? So this is the question for the day. And anytime you meet a depreciation question like this, the first thing to look for is the method of depreciation they are actually requiring you to use. Is that okay? And the depreciation policy. Is that okay? You consider the method and the policy. But in our question here, they are actually asking of the reducing balance method and each month ownership basis. With the reducing balance method, it actually means that we calculate the depreciation on the net book value or the carrying amount of the asset. Is that okay? But with the each month ownership basis, it means that we are going to calculate the depreciation based on the number of months the asset is being in the business. Is that okay? That is the fractional policy. But with the reducing balance method, we calculate the depreciation on the net book value, though. But for the first year or the initial year of the assets, we calculate the depreciation on the cost of the assets, and in subsequent year, we calculate depreciation on the cost. For instance, when the cost of the asset is 1,000 cedis, and we have to calculate the depreciation on reducing balance method. For the first year, we need to calculate maybe 10% on the $1,000, and that will give us 100. Is that okay? As annual depreciation. But let's assume that the asset has a balance brought down. Is that okay? It has a balance brought down. And it accumulated depreciation too is a balance brought down from previous years. So if you have to calculate depreciation for this year, we are not going to calculate on the cost. Because there is a brought down, we need to take the brought down from the cost of the assets brought down. And that will give us 1,000 minus 100. That will give us 900. Then we calculate the depreciation, that is 10% on the 900, and that will give us $90. Is that okay? So that is the dynamics of the reducing balance method. So let's try to solve this question and see how the account will look like. Is that okay? So we have the name of the business is Nimapa Limited. But to solve a depreciation question very easy, first of all, you need to calculate the depreciation, the annual depreciation of the assets before you begin to calculate or before you begin to prepare the accounts. That is the motor vehicle account, provision for depreciation, and motor vehicle disposal account. So first of all, I would like us to prepare the depreciation account. I would like us to prepare a statement of depreciation to calculate the annual depreciation of the asset. Is that okay? So our statement of depreciation the asset is a motor vehicle. We have 3 different motor vehicles. From the question we have GT 400, we have JR 429, and we have TR 140. Then we bring the total, and let's represent here the years. But mind you, because it is a one asset, that is motor vehicle, that is why I'm preparing the accounts as one. Is that okay? So that at the end of the period, we add all the motor vehicles and bring them annual depreciation, the total annual depreciation. But if it were maybe motor vehicle and furniture and fittings, we wouldn't have combined the two. We should have prepared the statement of depreciation separate. Is that okay? So take notes. So the first year we have, that's 1st January 2020. That is 1st January 2020. There was acquisition of GT 400. Is that okay? And the cost is 50,000. And from the question, we can see that they say that the company depreciates the vehicle at a rate of 20% per annum. So the rate is 20% per annum. So on the cost of the asset, the cost is 50,000. So 20% on 50,000 will give us 10,000. Is that okay? And in 2020, we didn't acquire asset JR 429 and the same to TR 140. So there is no depreciation for these two assets in the year 2020. So the total depreciation will give us 10,000. We are done for 2020. So let's move to 2021. Is that okay? So in 2021, that is on 1st July 2021. By this time, we acquired asset JR 429 at a cost of 80,000. We actually acquired this asset at a cost of 80,000. So 20% on the 80,000. Is that okay? But mind you, we acquired the asset in July, 1st July. This means that the asset is this asset is actually in the business for only 6 months in the year 2021. That is from July to December, 6 months. So we need to actually take the fractional policy into consideration. So that is, because it is in the business for 6 months, that is 6 out of 12. Okay. Okay, so this is going to give us 8,000. Are you okay with this? All right. So, and we also consider the GT 400 because the GT 400 is still in the business for the year 2021. Okay, so we need to actually calculate depreciation on it, and that is the same 20% on the net book value. Is that okay? Because we are using reducing balance method. So we take the annual depreciation from the cost of the assets, and that is going to give us 40,000. Is that okay? So 20% on 40,000 is going to give us $8,000. But mind you, let me bring my currency sign. Is that okay? We are working with dollars. So let me bring it. Dollars. So it will give us $8,000. Is that okay? And in the year 2021, we didn't acquire asset TR 140, so no depreciation for this asset. So the two depreciation will give us 16,000. So we are done with 2021. So let's move to 2022. That is 1st January 2022. We made another acquisition. That is TR 140 at a cost of $72,000. $72,000. Okay. So $72,000. TR 140. So that is 20% on 72,000. That is going to give us 14,400. And mind you, this asset JR 429 is also in the business for the whole of 2022. So let's calculate the depreciation on it. That is 20% on the net book value. The net book value, we will take the annual depreciation from the cost, okay, and get the net book value or the carrying amount, and that is 72,000. When we calculate 20%, we arrive at 14,400. Is that okay? So let's also consider the asset GT 400. But mind you, from the question, they say that an asset or motor vehicle GT 400 was disposed of on 30th June 2022 of an amount of 31,000. So we dispose it off on 30th of June 2022. This means that this asset for 2022, it is in the business for only 6 months. Is that okay? So we are going to calculate only 6 months. So that is 20% on the net book value. We take the annual depreciation from the cost. That is going to give us 32,000. You can decide to take the 8,000 from the 40,000, or you add the 8,000 to the 10,000, making 18,000. Then you subtract it from the initial cost. Is that okay? That will give us 32. Because it is in the business for only 6 months, we calculate the fractional policy. That is going to give us 30,200. Is that okay? So we are done with 2022. And this 30 is going to give us 32,000. So we sum it up. This 30 will give us 58,000. And this will give us 14,400. These two will give us 22,400. And the summation of this 3 annual depreciation will also give us 21,200. That is the total. So when we are preparing the provision for depreciation account or the provision for depreciation account, we are going to consider this annual depreciation. So keep this annual depreciation in mind. We are going to use them 10,000, 16,000, and 32,000. Is that okay? And from the question, we dispose of this asset on 30th June 2022, and its annual depreciation as at this date is 21,200. So when we are preparing our asset disposal account, it is this accumulated depreciation that we are going to use. Is that okay to be credited to the asset disposal account? So this is a statement of depreciation, and this is not part of the requirement. This is just a workings that will help you to do your calculation. Is that okay? So we are now going to move to the requirements. So let me create the board so that we move to the requirements. The first requirement says that we should prepare motor vehicle account. Is that okay? The motor vehicle account. So we have vehicle account in dollars. This motor vehicle account is the requirement A, and I will say that the motor vehicle account, it is a cost account. The reason why I'm saying it is a cost account is that when we acquire an asset, we debit the motor vehicle account with the cost of the asset, and anytime we dispose of an asset, we credit the motor vehicle account with the cost of the asset. Is that okay? So in 1st January 2020, we acquired an asset. Is that okay? That is 1st January. Let me even do it this way. 2020. On 1st January, we acquired an asset, let's say by cash, and the motor vehicle we acquired is GT400, an amount of 50,000. That is all for 2020. So let's close it. So that will be on 31st of December, you have a balance carried down of 50,000. We are done with 2020. So let's move to 2021. Okay, so this balance carried down will become balance brought down on 1st January. Okay, so balance brought down for 50,000. And on the 1st of July 2021, we acquired another asset. That is 1st of July. Okay, we acquired an asset by cash, and that asset is JR429 from the question. Okay, and that is 80,000 from our question. Is that okay? And we didn't acquire any more assets in 2021, so we closed the account. That would be 130,000. Okay, so the total will be 130,000. Is that okay? So that means that as at 31st December, we have the balance carried down of 130,000. And now in 2022, this balance carried down will become on 1st January to be balance brought down of 130,000. Is that okay? And from the question, we acquired an asset that is on 1st January by cash, and the asset is TR140, and the cost of this asset from the question is 72,000. And the total is going to give us 202,000. That means the credit side will also be 202,000. But I want you to remember that on the 30th June 2022, we dispose of assets. Let me check from the question. We dispose of assets GT400 with of an amount of 31,000. Is that okay? We dispose of these assets. Okay. But I told you anytime we dispose of an asset, we actually credit the asset account with the cost of the assets. So that is on 30th June. Is that okay? We made a disposal. And the cost of the assets is 50,000. Is that okay? Is that okay? So let's actually consider the closing balance. We want to actually close off this account. Is that okay? By closing this account, the difference here will be 152,000, and that will be on the 31st of December, the balance carried down. Is that okay? So that means that on 1st January 2023, we have another balance brought down of 152,000. Is that okay? So this is how we prepare the motor vehicle account. Very simple as an ABC. So let's also consider the provision for depreciation account. That is the B part. Provision for depreciation account. But remember that this provision for depreciation is on the motor vehicle in dollars. This provision for depreciation account, what it does is that at the end of every year, the annual depreciation will be credited to provision for depreciation account in the name of the income statement or the profit or loss account. Is that okay? So we credit provision for depreciation account in the name of profit and loss account, then we debit profit and loss account in the name of the depreciation. Is that okay? So we also do it year after year or year by year, 2020. These figures I'm coming to right here is from the statement of depreciation we actually prepared. Is that okay? So that is at the close of, that is 31st of December of 2020. We have an annual depreciation from our statement of depreciation. So that is the profit or loss account. And the amount was 10,000 from our statement of depreciation. So we are going to close the account very simple. That will be on the 31st of December. That will be the balance carried out. And the same 10,000 we close up the account. And this will come to 2021. This carried down will come to 2021 on the 1st January as the balance brought down of 10,000. Is that okay? From our statement of depreciation, we had an annual depreciation for 2021. Is that okay? And that is from the statement of depreciation. We had 16,000. So that will be on the 31st of December. Okay, that will be profit or loss account. And it was 16,000, the annual depreciation. So the total is going to give us 26,000. That means the debit side is supposed to be 26,000. Is that okay? So that will be at the close of the year, we have our balance carried down of 26,000. Then we move to 2022. 2022, that is the final year. 2022, this current amount will come as balance brought down of 26,000. But mind you, in 2022, we had another annual depreciation. Is that okay? And the annual depreciation we had was 32,000. Is that okay? So that will be on the 31st of December. Our profit or loss account will be debited with 32,000 because we are crediting this account. Is that okay? And the total is going to give us 58,000. The debit must also be 58,000. Is that okay? And we need to actually close off this account. But remember that in the year 2022, we dispose of an asset. Is that okay? We dispose of this asset, GT 400, and from our statement of depreciation, the total accumulated depreciation was 21,200 from our statement of depreciation. So we need to take 8 accumulated depreciation from the total depreciation because we sold off the asset GT 400. Is that okay? So that is what we are going to do. We sold it on 30th of June. Is that okay? And it was a disposal. And 8 accumulated depreciation is 21,200. Is that okay? And now we have to close the account on the 31st of December. That will be the balance carried down. Is that okay? We have to close off the account of an amount of $36,800. This means that on 1st January 2023, we may have a balance brought down of 36,800. Is that okay? So this is how we prepare the provision for depreciation account. Is that okay? This is how we actually prepare the provision for depreciation account. But mind you that in the C part, they are saying that we should prepare the motor vehicle disposal account for GT 400. What you are going to do is that you are going to make transfer of entries. You can see that disposal is being found at the debit side of provision for depreciation account. This accumulated depreciation will be credited to the motor vehicle disposal account because it is at the debit side of provision for depreciation. And this cost of the asset we dispose of, and it is being credited to the motor vehicle account. So in effect, we are going to debit the motor vehicle disposal account with this amount. Is that okay? And we also credit the motor vehicle account with the proceed to determine the profit or loss made on the disposal. So let me clean one pass so that we can make that entry very simple. Is that okay? So I wish to claim the motor vehicle account. So we are moving to the requirement C. That is motor vehicle disposal account. Remind you, the asset was GT 400. Let me actually give a space. All is in dollars. We are going to do transfer of entry. Is that okay? It is very, very simple. A transfer of entry. So we dispose of assets GT, that is asset GT 400. Okay, and we made that disposal on 30th June. Is that okay? And that is the corresponding entry was in the motor vehicle account. Motor vehicle account. Is that clear? Then the asset was GT 400, and the cost of the asset was 50,000. Is that okay? We are actually preparing this account to determine the profit or loss on disposal. Is that okay? And now we are done with this entry. Let's also consider this entry. Okay, that is the accumulated depreciation. So we have accumulated depreciation of 21,200. Is that okay? And there was also a cash proceed. Is that okay? From the question that on 30th June 2022, we disposed of assets, motor vehicle GT 400 of an amount of 31,000. So that is proceeds on disposal, and the amount is 31,000. Is that clear? So the total, the credit side is bigger, so the total will give us 52,200. The debit must also give us 52,200. As simple as ABC. So now we want to determine the profit or loss on disposal. The debit side is shorter or smaller than the credit side, so the difference will be 2,200. And this amount is going to be, we will transfer it to the profit or loss account. Is that okay? But this time it is a loss account. But mind you, it is a gain. Again, because it is found at the debit side of the motor vehicle disposal account, we are going to credit the profit or loss account. So this is a gain on disposal. So this is basically how we prepare these two accounts. So I think we'll be ending our lesson on depreciation of tangible non-current assets over here. But upon special request from my viewers, I may make another video on that. Until that, I think we'll be moving to another topic. But then, if you haven't subscribed to the channel, I will entreat you to do so. Kindly subscribe to be an official member of this channel. Like, comment, and share this video for the benefit of other people. Until we meet, I think bye for now.